Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. Welcome to episode 18. Today we're joined by an amazing protocol within NFT finance, Astaria. Dubbed the NFT Liquidity Engine, Astaria is currently building one of the most important building blocks within NFT ecosystem, instant customized loans to NFT owners. It combines really interesting pros of peer-to-peer and peer-to-pool protocols that allows very customizable, risk-defined NFT loans for both lenders and borrowers. So we hope you like this episode as we dive deep into this very interesting protocol. Welcome to this is the 18th episode of Look at My JPEG podcast. And this is an exciting one. I've been wanting to chat with Justin and the team from Astaria for quite some time. There's not a ton of information out there. So my working knowledge of Astaria comes from a blog post they put out, I think last year around August, and our calls and conversations so far. So I'm excited to dive deep into this one. So thank you for coming on, Justin.
Yeah, thank you so much for having me. We've been watching what you guys have been building, and it's awesome to see how, everything transition over the last 3 months and the traction you guys have gotten for yourselves, which is very cool. And I think NFT perps are a really much needed product, or something that the market really wants. So I think you guys are the first mover there, right? I don't know of any other NFT perp platforms.
Luckily, we're one of the first ones. There's a couple other ones coming out we're pretty excited about, including I think JPEG is working on one with different mechanism, and there is a couple more protocols that's coming out with different models as well. So we're excited to see this space flourish.
Oh, awesome. Yeah, very cool. I think there's a lot of cool work you can do there. And certainly, I mean, as we'll get into it, there's certainly a lot of work that would apply to what we're doing at Astaria too. So it's something we're really interested in as well.
Yeah, absolutely. So before we hop into Astaria, do you mind giving us a quick, intro of yourself? How did you get into the space? What have you been up to? And we can get back and we can get into Astaria.
Yeah, sure. So a little bit about me. Let's see. So I was originally in the media and entertainment industry, worked in film. So in undergrad, I was actually a film student. And then as soon as I finished school, I moved out to Los Angeles and started working in the entertainment industry. So for the Americans listening, you'd probably know the shows I worked on. I worked on Hell's Kitchen and then the TV show Family Guy, which is actually pretty well known internationally now. But I did that for a few years and sort of realized it was a lot of fun, but it wasn't, I wasn't having the impact I really wanted. So decided to get my MBA and transition more to a business role. So I ended up working at Paramount Pictures in business development and strategy, and then Snapchat. And while I was at Snapchat, I met someone that was starting a business in the crypto space. And this was right as the COVID crash was happening. So actually a perfect time looking back on it to jump in. So started working on that project, did that for about a year. That project was called Brink, and they're building an automated transaction network similar to Gelato, if you guys are familiar with that. And then while I was there, I ended up moving after about a year to a project called Ondo Finance. At the time, we were providing a liquidity as a service offering, helping DAOs get liquidity for their tokens. But they've since pivoted. You guys have probably seen them on Twitter recently. They got a lot of buzz for creating a treasury stablecoin product where users can borrow stablecoins against on-chain treasuries, which is pretty cool. So did that for a while before I met my co-founder, Joe. And Joe was just leaving Sushi at the time. And we met, we chatted, we really hit it off, got along, and realized that the market was really ripe to do a fundraise. And this was about a year ago from now. And we raised our seed round there and got started, and have been working on it since.
Yeah, that's amazing. So I first came across Justin from his content. He's teaching a lot of the stuff about DeFi, getting people to understand how new protocols and where real yield comes from. That's how I kind of first came across Justin, and then learning about Astaria early on, and then realized it was Justin's project. So it was really cool to have it all linked together. Did not know you were in the entertainment industry for Hell's Kitchen. That's one of my favorite shows.
Oh, really? Nice. Yeah.
Yeah,
Time.
I think Gordon
Um,
Ramsay has a way to embarrass people, but also make it entertaining at the same time.
yeah. Well, it's funny in life too how like your different paths sort of connect you and offer you experience. For like, I never thought being a film major would be applicable, but it definitely helped when I was really creating a ton of content up until I started Astaria really, and it was super helpful for that. But yeah, I forgot to mention I have a educational focused YouTube channel. I haven't been posting videos too frequently now because it does require a lot of mental attention just to keep up on top of it, but it is definitely something I want to get back into.
Yeah, for sure. I think it's one of those really good ways in the space to provide value for people that are wanting to get into it, not knowing what they're doing, to build that brand and presence. And I think you have benefited a lot of people and helped a lot of people in the space, and I think a lot of people would thank you for that.
Oh, thank you so much. Appreciate it.
So let's dive into Astaria, and I'm super excited for this one. Give us a little peek behind the curtains in terms of the origin stories of how you guys got started, what inspired you to create Astaria, what are some of the problems you saw in the space, and how Astaria, can solve those problems.
Yeah, sure. So when about a year ago, when we started our fundraise, we were actually fundraising initially for a different concept. We were just thinking of an improved ERC20 lending market. And then I think Joe was actually speaking to someone at ETH Denver, and they were like, why don't you just do NFT lending? Like, as far as we know, no one's really solved it in an efficient manner, and we think it's probably going to be something big. And that sort of clicked with Joe. For a couple of weeks there, we were designing the system for Astaria, and of course, it's grown ever since. When you're working on something, a lot of other new and unique problems pop up. Um, but yeah, I guess I can give a high level explainer of how Astaria is differentiated as an NFT lending market, if that makes sense.
Yeah, for sure.
Cool. So today, the two successful models for NFT lending markets have been what they call peer to peer and peer to pool. Peer to peer was a model created by NFTFi or NiftyFi. I would say they're probably one of the most successful and innovative NFT lending platforms in the space. They've done an awesome job, and they were the first, so very cool there. Um, their model is great because specific NFTs can get specific valuations, and that's the main benefit of the peer-to-peer model. But the main downside is it's very, let's say, time intensive and knowledge intensive for users. So each individual borrower has to sign a message saying they're willing to borrow against this asset. They have to request terms, and then they have to sort of select which terms are the best and maybe negotiate in Discord with any of the individual lenders and ask for better terms. And then from the lender perspective, it doesn't scale too well because you can't really just have these like floating offers out there. You have to wait to see, who requests terms. You have to negotiate with them, and it's very individual and manual. But of course, like the trade-off here is you're getting those precise valuations for each NFT. So that's peer to peer. And then peer to pool is sort of almost the opposite approach. This is popularized by, if you guys are familiar with BenDAO and JPEG, are probably the two biggest peer to pool players, but we do see a couple others popping up. And they basically allow users to borrow, and they give their users instant liquidity across specific collections. So they might say, every Bored Ape can borrow 40 ETH at this APR, and it's the same for every piece in that collection. So the benefit is in instant liquidity, which is sort of solving the problem for NFTFi. But the downside is you're not getting customized lending terms. So every asset is treated the same in a collection, which is obviously pretty inefficient because only about, I think it's something like 30% of NFTs in a collection are considered the floor. And it also sort of excludes or like diminishes the purpose of NFTs, that each asset is unique, and it sort of limits further use cases than we've seen beyond just, a 10,000 PFP collection. So we saw the existing peer-to-peer and peer-to-pool model and didn't think it was really perfect. And so we were trying to think about what we could do to sort of address that. And we came up with what we call the three actor model. You can find information about that if you're interested in more in our docs. But effectively, we add a third role to the system that we call the strategist. And the strategist basically can create a vault. And in that vault, they can appraise anywhere from 1 to 3 NFTs to hundreds of thousands. And those all get Merkleized and signed, and anyone can borrow against the terms that the in that vault. So a strategist is someone like generally an expert in the market, like Upshot, Deep NFT Value, Goblin Sachs, etc. These folks are all, crafting appraisals that get stuffed into a vault, and they can update that continuously. And then anyone can lend and borrow against the terms of that vault. So if you're a regular user, you come to the platform, your assets appraised by multiple vaults will automatically give you the best loan across any vault. And then if you're a lender and you want to lend to like Upshot, Deep NFT Value, whoever it is, you can deposit capital and put your capital to work according to their terms.
Appreciate that overview. I think, like you mentioned, before Astaria, there has been two actors. For those that are listening, you have the lenders and the borrowers, and to find the good balance of the two, like the peer-to-pool has been more focusing on efficiency, and the peer-to-peer has been focusing more on a very well-defined loan terms. So that's in some ways good for the lender, because you know what your risk is very well defined, and for the borrowers as well, you know exactly what you're getting out of the loan, and it's very efficient. You can get way more out of a single that's more rare NFTs out there. So that all makes sense. With regards to question with regards to the strategist that creates a vault. You mentioned that the terms in terms of appraisal for different NFTs ranging from a 1 to 3 to 100, I don't know what the cap is. So how do these values continuously be updated? Is it on a per block basis, or is it up to the strategist in terms of how often do you want to update the appraisals?
Yeah, it's a good question. So our strategists, I believe, have indicated like anywhere between 10 minutes to each day, they would update their terms depending on the market. So it's something they can do as frequently or infrequently as they'd like. But I think we'll see the more sophisticated strategists probably do it very frequently because, when we talk to them, they have very precise models that they're using to put a valuation on an NFT. And that valuation, of course, fluctuates. I wouldn't say minute by minute, but very frequently, because if someone, lists an asset below floor, if there's a rush to sell different NFTs, if a certain trade falls out of favor because 3 or 4 people sell that trade into some liquidity, that could change the valuation. So I think it's important for strategists to update it semi-frequently, but yeah, at the end of the day, once the loan is taken out, the loan is taken out. And if someone borrows against those terms, they've locked in that rate. So it is fixed rate and fixed term.
So speak to us a little bit about being a lender. What makes it different from a lender's perspective when comparing lending on NFT versus lending on perhaps like a BendDAO, for example, and then what makes lending on Astaria, if chosen the right strategist, a better, environment for lenders in terms of risk management standpoint, in terms of, perhaps capital efficiency, or because one of the things that we think about a lot is what does it mean for a lender to have idled capital? I think liquidity is sacred in the space. I think a lot of the perhaps like people that are sitting with 100 ETH looking to lend out, they want to have their ETH being at work at all times. And that seems to be the case if you can define your strategies pretty well. Define your strategy pretty well if you're lending on NFT, for example. So what does it mean for a lender perspective when it comes to lending on Astaria versus others?
Yeah, it's a great question. So it differs, I would say, the most from NFT because unless you're participating as a strategist, which of course anyone can do, and you could all do that and write your own terms and lend to your own vault. But assuming you're just a lender, you just want to sort of put your capital to work, it's very differentiated from NFTFi because with NFTFi, you of course need that expertise, right? So you need to go to NFTFi and say, okay, I like this ape. I think it's safe to lend 20 ETH to, and I think this is the right interest rate. You have to sort of, compete with the market yourself, actively monitor that, offer the best terms and try to get selected. Whereas with our system, you would just deploy your capital to whichever strategist you would like, assuming there is one you'd like. Of course, you can be your own strategist, but I think for most users, they would be trusting the work of the strategist, we've been working with getting ready to launch and sort of select which methodology and approach they agree with there. And then, of course, it's different from BendDAO just because it's a more precise model than just a floor-based model. And so our hope is that will lead to better returns and also safer returns. We'll be able to lend more to higher quality assets in a collection. We'll be able to charge dynamic interest rates based on the risk of each individual item or asset in an NFT collection. So our hope is the risk return profile is a little better and more competitive than BendDAO's.
Mm-hmm.
And then,
go ahead.
I was just going to answer your question about idle capital. Yeah, it's a really good question and something we spent a lot of time thinking about. So there is, of course, you want a vault to be as utilized as possible, or the capital is just sitting there. Our hope is that the market forces sort of create, naturally end up at an appropriate utilization ratio where enough capital from a vault is deployed, and if not, that capital would just leave, is our hope. But we're also exploring, once withdrawals are on and we're live and things are working well, we'll of course end up holding all ETH in some sort of liquid staking derivative so that the ETH isn't just idle. When it's sitting there waiting to be utilized, it's held in an LSD at the very least.
Yeah, that's very interesting. I think one of the conversations I've had with a recent friend of mine is there's this protocol out there that's looking to do a liquidity, existing at all, like multiple different protocols at once, where you could take an example of a limit order on a decentralized exchange. You can place a limit order and not actually have it there while you have your ETH being utilized in a yield bearing, interest bearing strategy like an LSD, for example. And only when the limit order is being taken, then you have this withdrawal function on this LSD, and then going back to fill that order. So these are the things that I think a lot of teams are working on and thinking about in terms of maximizing capital, the activity essentially. So for a borrower's perspective, what does that mean when it comes to borrowing on Astaria? What are the differences when borrowing, comparing to BendDAO or NFTFi, for example, when borrowing on Astaria, like a vault?
Yeah, for the end user's perspective, it'll feel very similar. The difference is you'll be able to borrow a lot more against your NFT and have a lot better rates. That's at least what we're modeling out. In the back end, though, there's a ton of differences happening. So we have something called a lien router. So we call all our loans liens because they fit in different lien positions against an NFT. So an NFT can have up to 5 liens against it. So strategists can say, I need to be the most senior debt against this NFT. I'm always going to get paid out first. Whereas another strategist might say, I'm willing to take the second lien slot, third, fourth, fifth, depending on what they're comfortable with. And of course, those will come with different interest rates. So we built something called a router. You can think of it like a Uniswap router, where we're basically going to bundle the best terms for that user against any given NFT or set of NFTs. They could, of course, select multiple. And in the back end, we're always going to be doing that work to optimize for the lowest rate and the best duration, depending on what the user wants. And so, our hope is we're building and offering much, much better terms for borrowers, much more efficient terms. We think the current rates are like on average between 40 to 50% APR to borrow against your NFT. And we think it kind of makes sense because the markets are very volatile, but we think we're going to push that down significantly just through our system and the natural competition between strategists. So it'll feel similar to a BendDAO experience in that you don't have to do this bid and ask process you do on NFTFi. You just get the best terms available to you right away. But the hope is you're going to get, better loan terms overall.
Okay, a lot to unpack on what you just said there. Uh, so I think one of the first the differences compared to BendDAO is I think it's going to be BendDAO rates are as far as I know, they're loans in perpetuity. So as long as you pay back on your interests, you can always have a loan active. That's not the case with Astaria, right? Depending on which strategists deploy on strategies, there's a fixed duration on the loan.
There is a fixed duration, but we have a mechanic called permissionless refinancing, where anyone can buy out your existing debt as long as they offer better terms. And so you can
Mm.
imagine if your loan terms are still valid, meaning like let's say the NFT is flat or has gone up, the strategist that you've currently borrowed from or a different strategist can automatically just keep rolling over your debt and offering you new terms as long as the terms are better.
Very interesting. And when you said earlier about different liens for a single NFT, are you saying that, let's say I have a 400 ETH worth of NFT, are you saying that you're combining different vaults to fit this specific 400 ETH loan, where perhaps vault A can take on 80 ETH worth, and then vault B could take on 120, and so on and so forth?
Yeah, exactly. And it makes a lot of sense, right? Because there are going to be strategies like, let's say you do have this 400 ETH worth NFT. You could probably say it's almost riskless to lend you, assuming the market's somewhat liquid, like we could at least lend you 10 ETH in almost a risk free fashion, right? At a very low interest rate. And then that strategist and the lenders might be very risk averse. And so that's all they're comfortable with. But it's also pretty clear that, you could take on a little more risk as a strategist and say, we're fine. That 10 ETH is the senior debt, and we'll lend an additional 100 ETH, let's just say, on top of that, and we'll get paid out second in a liquidation after that first 10 ETH, assuming the borrower defaults, and we'll charge a slightly higher rate. And that process goes on and on until the 5 slots are filled. And to us, this just makes sense because it allows strategists to offer like very different risk reward profiles to the lenders. So of course, most people are going to be most comfortable in that first slot and have lower returns than people, all the way at the 5th slot, assuming it fills up that way.
So this is assuming does appraisal come into play in making this a harmony like a harmonistic combined strategy
So yeah,
or it does, right?
well, it's a great question. I mean, all of our strategists that we're working with ahead of launch, and we're obviously happy to work with folks, anyone that's writing appraisals now, but all of our strategists today are basically, they started as appraisers. Like if you guys are familiar with Upshot, Deep NFT Value, NFT Bank, Goblin Sachs, all of these, there's probably about 10 to 12 appraisers in the NFT space that are building appraisal engine. And an appraisal is not equal to a loan term, but they're very similar. So if a strategist is an appraiser, then they're probably like very capable at converting those appraisals into strategies. Because the strategy really is just how much I can lend you and at what rate and for how long, which is very, very similar to the problem of like, what is this NFT actually worth? If you can figure out what the NFT is worth today, you can get like very close to writing good terms.
Is finding a consensus on appraisals a challenging part for your development so far, or for the strategist?
Well, we're really not looking for consensus. So it's actually in our best interest for all of the strategists to have different appraisals, right? So one strategist might say this NFT is worth 10 ETH, the other might say no, it's worth 15, another might say it's worth 20. And this is good for us because they're all in some ways competing with each other to offer the most competitive terms to the user. So we're actually not looking for any consensus there. It's up to the user to, determine which. It's up to the lender to determine which strategist they want to lend capital to.
Yeah, you're essentially letting the market compete itself from the risk profile per strategist and lenders.
Yeah.
Very interesting. So yeah, I think it makes a lot of sense, and the way that you guys are tranching essentially these different loans based on the strategist offers would make this incredibly efficient. I think from an outside point of view, uh, this is really exciting. So question for you: what are the things that excite you the most with regards to what lending and borrowing in NFTs could be in some of the markets that perhaps haven't been tapped into?
Yeah, this is something we we all geek out over at Astaria. We're I, I'm very excited about these other NFT products that are coming out that go beyond art and JPEGs, and which is great. I mean, that's going to be our primary use case, but there's so many other use cases for NFTs that I think are really interesting, and we want to help provide liquidity to those as well. So, for example, we have support for Uniswap V3 LP positions, which I think, as far as I know, has not been implemented by anyone yet. But effectively, a strategist would say, for example, I'm willing to lend to any ETH USDC position at this range, at this rate, and then anyone can borrow against their Uni V3 position, and the fees can pay down the debt, which we think is pretty cool. And then we're also talking to Liquidity. They have chicken bonds, which we want to lend against, which are basically like stablecoin bond tokens in some sort of way with a gamified mechanism on how you get your return, which is pretty interesting. And then there's a ton of others like playing in this new NFT financialization space, like Dyad is building an NFT backed stablecoin, as far as I understand. So yeah, we're really excited about these other new and emerging use cases for 721s that we just haven't seen yet.
Yeah, that's really interesting. Something that we're very excited about as well. I think that the NFT, the definition of NFT is non-fungible tokens, and that means so many different things. And we've been only able to serve the markets that have volume from NFT perspective. But we'd love to see some of these other NFTs that have different utilities and different underlying values really drive in terms of money markets behind it and the usage of it going up. Coming back to some of the points that you brought up earlier about you and Joe's first thinking on Astaria being a lending and borrowing protocol for ERC20s. Like, what do you think of Astaria's usage and utility on if we were people to use ERC20 as collateral? Is that a direction you guys want to take?
Uh, yeah, it's really interesting. There's certainly going to be demand for, like, you could imagine borrowing against ETH or WBTC, but the benefit on our platform is there's no forced liquidations like with Aave. You're getting fixed rate and fixed term. And so you only get liquidated if you default on your debt, which has obviously like advantages and disadvantages to standard lending, like with Aave and Compound.
Mm-hmm.
But it's just different. I think some users would prefer it. You can um, probably the rates that you would offer and the loan to value ratios you would offer would be more compelling. Would be different, let's say, on our platform. So something we're looking into and we can support. It's just not something we're going to build into our UI for our launch, just because we want to get this thing out there as soon as possible now.
Got it. Yeah, that makes a lot of sense. And ultimately, it comes down to, I would assume the protocol in terms of creating vaults, being a strategist, and what type of collateral you can take. These are permissionless, right?
Correct. Yeah. So for our UI, at launch, we're only going to show the strategists we've been working with ahead of our launch. So we'll have them like quote unquote whitelisted in our UI. But anyone can be a strategist, and you can sort of link off to your custom vault that you can accept capital from. But the reason why we limit it for the UI is the strategist is, I don't want to say a trusted role, but there are like, an unexperienced strategist could certainly misappraise something that would cause the vault to lose money, or they could maliciously appraise something. If they own a certain NFT, they could overappraise for it and then take that capital or borrow and sort of just default on that loan. So at the start, it will be whitelisted on our UI, but of course anyone can do it, participate on chain if they want. And then as we get more data about how independent strategists that we're not working with are performing, we'll probably end up showing them in our UI and just having performance metrics so that anyone can decide for themselves if they want to lend to that vault or not.
Yeah. Okay. That makes a lot of sense. I didn't think about the aspect of potential bad actors in being a strategist because I guess that being a lender and when you're providing these capital, you could run into the issues of being exploited. So this is a good thing that I wanted to ask as well. Like when we think about being a lender, like typically the risk that you will run into from a Ben Dow's perspective, and this is like last year, there's a narrative going around about how Ben Dow is created this downward death spiral for the Bored Ape Yacht Club, and everyone's freaking out. I personally think it was more of a market naturals, play and how money markets typically work, and nothing has broken. What are some of the risk of being a lender on a strategy vault, and particularly when it comes to when a borrower defaults the loan and needs to be liquidated? Do strategists focus on a very well planned liquidation plan? What does that look like? Do they have to liquidate loans? Because if you think about NFT fi lenders, some of them are actually up there to purchase NFTs at a very cheap rate. So, for example, I believe there was an ape that was bought for just 20 ETH on NFT fi. And this might have been Goblin Sachs actually. So that's interesting, right? Them being these capital supplier on these vaults, they don't really mind getting these cheap NFTs at a very large discount. So what does it mean when a loan gets defaulted and collateral it is coming in? If there are, let's say, five different lenders that are lending into this vault, when with various different percentages in terms of pro rata on this collateral value, what happens when it's liquidated, and what if it doesn't liquidate? What happens?
Yeah, it's a great question. First, I would say is like we try to be a very borrower-centric platform, as they're like truly the customer paying for everything. They're paying all the interest, and so we come at it as approach of maximizing value for the borrower. And if you think about it, a liquidation where you give the NFT to the lender is actually really a bad, in our view, mechanic, because it's very uncommon for a borrower to default when they're in the money. What that basically means is if their NFT is actually worth 100 ETH and they only have a 20 ETH loan and they don't pay it back, that's kind of a bad part of the system, right? Like if you think about how you get liquidated on Aave, there's some sort of haircut that's taken from your position, but we can't just we're not going to just take all of your position away. We give some reward to liquidators. We make the system whole again, pay back all debt, and then you get excess. And so that was our goal as well. We didn't want our borrowers to sort of suffer just because they missed a payment by accident, they forgot to pay, or they just don't have the capital on hand, but their NFT is actually still worth quite a bit. So what we do is we liquidate through Dutch auction in Seaport, OpenSea Seaport. So anyone can call liquidate when a borrower has defaulted. It gets sent to Seaport in a Dutch auction. And then basically what we do is we make the lending vault whole plus a fee for going to liquidation, and then any excess capital that was returned above that goes back to the borrower. And so this is beneficial because, let's say I borrowed 100 ETH, I invested it in something that went sour, I can't pay back my debt now, but the asset is still worth quite a bit, and I know that. So this is similar to how like you would liquidate on Aave and Compound. We want to be able to return excess capital minus a liquidation fee back to the borrower. So we don't return the NFT to the vault, and this wouldn't really be feasible in our system just because, you can have one person deposit to a vault, you can have 1,000 people deposit into the same vault. So we can't split up the NFT. So what we do is we liquidate through Dutch auction.
Yeah, that makes a lot of sense. And then the underlying, the whatever the left value goes back to the borrower, so they don't feel like they got robbed, essentially.
Yeah, exactly. I think it makes sense. I mean, I see the use case for just giving the NFT to the lender, but we're trying to create more of like a scalable financial product that, just works and doesn't require the lender to sort of take possession of this NFT and then liquidate it themselves. Um, so yeah, we'll see. But that's the approach we chose.
Okay. What are the impacts you like to see with the launch of Astaria, specifically towards the lending and borrowing space in NFTs?
I think our main goal would be to see interest rates really come down. Our system, we've tried to design as competitive as a system as possible for lenders and strategists. And so our hope is that that competitive pressure pushes rates down to a more fair place. Because rates, if you look on Dune dashboards, rates are quite high across the various platforms, especially NFTFi. If you look at Bendel, they're sort of incentivizing the bar rate to be lower. They're paying out, I think, almost 20% in incentives, but rates are still quite high, and we want to help bring those down and just make the market more efficient and easier for borrowers.
Yeah, that makes a lot of sense. And then once you have that, it kind of kicks off more volume, which is good for the lender. I think there is a good balance where you can find where perhaps capital has just been way too too expensive to borrow, and therefore the volume has been potentially hindered because of that. And then with the rates potentially going down, it would drive the volume where maybe the lenders become more profitable because of that. So that's something that I'm personally very excited about as well. With in regards to the whole space in general, there's a lot of different lending and borrowing protocols out there. I think with that, and also these different new innovations coming out, it will allow the markets to be more efficient overall through competitions and markets' natural progression.
Yeah, I hope so as well. I definitely agree with that.
Yeah. Is there anything that I missed that you feel you should be highlighting?
No, I think that covers everything well. Thank you so much.
Yeah. Well, Justin, this is a short episode, but I really appreciate you coming on, and I'm very excited about your guys' launch. When are you guys launching, by the way?
So we haven't announced a date, but we'll certainly be live in Q1, and hopefully in the coming weeks we'll have some good announcements before ETH Denver. So we have a couple team members going to Denver, and so we want to get some updates out before then.
Got it. Okay. Well, I'm super excited for that. And thank you for this very, very in-depth and cool conversation about what you guys are building. I'm super excited for Astaria. And those who are listening, thank you for tuning in to this episode of Look at My JPEG. If you want to follow Justin, you can look up at Justin C. Bram, BARM, on Twitter, and also Astaria. It's ASTARIAXYZ on Twitter. Thank you guys so much, and I'll talk to you guys soon.
Yeah, thank you so much for having me. Thanks, everyone.
Bye. Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like and subscribe if you like the content, and we'll see you in the next episode. Cheers.